Thank you, Mr. Chairman. Just a couple points on previous conversations. Mr. Spriggs, Dr. Spriggs, we got a little bit of a chicken and an egg problem as it relates to big versus small, right? You said, well, look, you know, the big threat to small institutions is the growth of large institutions. But by over-regulating the small institutions, what was supposed to be too big to fail has become too small to succeed, driving business up. And so we've got to figure out the small business and the small bank piece of this. We've been working very hard on compromises, trying to advance some additional regulatory relief. Taking a look at a lot of the discussion that we've had here today is very helpful. Senator Perdue said, look, we have a problem that we aren't moving enough capital into business. I'm not sure I agree with that, but I do agree with that as it relates to small rural counties and communities. And I just want to give you some statistics, and this is for Mr. Heller and Mr. Powell mainly. If you look at economic studies from 2010 to 2014, U.S. counties with 100,000 or fewer residents combined to lose more businesses than they created, despite a growing national economy and a falling unemployment rate. In recovery beginning in 1992, by comparison, those same counties created a third of the nation's new business on net. Moreover, nearly 2 out of 3 rural counties lost business in this recovery on net from 10 to 14, and that is up from just 2 in 5 counties in the early 2000s. What's happening and how do we fix this? And I know that's a bigger question probably than just the banks, but capital formation is obviously a key component to economic growth. So what do we do to turn this around? Because we saw the reaction to this in this last election. And people keep saying, what's going on in rural America? This is what's going on in rural America. So how do we fix this?
I fully agree with you, Senator. What you're saying, if I understood you right, in the current expansion, there was less business formation than in previous expansions.
In rural counties.
In rural counties, and especially also, rural counties, small firms, and that's exactly the point I'm making in my testimony. Firms are actually leaving currently at a faster clip than they're entering new ones. So we have net losses. We also have the same phenomenon on the small bank side. There are no new banks coming in, rural or urban, basically none. And both of those things hang together. The topic of today is, what does the financial sector contribute to economic growth? And the financial sector in these rural counties especially is weak, and there's no new lifeblood coming in. And nobody can afford, and Mr. Powell, who is more of a rural small-town banker than I am, I'm a suburban rural small banker, can speak to that, I'm sure. It's very difficult to get the additional funds and to be able to stand the regulatory burden for these small institutions, so they're just not being formed.
Mr. Powell?
Senator, I think that's a valid point. I think one of the things, it's a complex question because the quality of life issues, there's a lot of issues that contribute to that. But from a bank standpoint, if I were going to put a bank in a rural community, I got to see economic activity. I got to return on my capital. So I have a choice where I will go. My capital will follow where I make money. So I've got to, one way I can make money is that the regulatory burden. I'm not saying free ride, free lunch, and all those things. I hope you understand that. Yeah. But I can't be worrying about assembling data. I can't be worrying about a qualified mortgage when I have a farmer who's got a farm that's clear and he wants to borrow 100% loan on a house. I can't worry about stuff like that. So you've got to give me a different set of regulations in order that I can breathe and exist, because I have choices. And I'm not going to go to that rural market unless I can make a buck. And if you burden me with regulations to open a bank there and to try to engage in banking, I'm not going to do it.
You know, the dirty little secret is that these community banks are relationship bankers.
Absolutely.
And I can tell you, I grew up in a town of 90 people. And you could look at a balance sheet of one guy and say, he's, just on the numbers, he's the guy that you should be giving money to. No one in town's going to give him money because he doesn't pay his bills. It's not, and you can see the guy come in whose
Absolutely.
balance sheet is net loss, and he's going to pay you back because you know him. It's character banking, and we're losing it in this country. And it's part of why rural America is retracting, I believe, is that we
Senator,
don't
they-
have
they-
that anymore.
They can't make that loan. They can't make that loan
Right.
under current regulations.
Right. I
They-
agree.
They can't do it.
We've got to unleash it, but I think that rural economic development is so complex, and one of you raised the quality of life issues. I have a test. Can they stream Netflix?
Yeah.
It seems like such a small thing, but I can tell you housing and quality of life.
Healthcare.
We used to say in rural America that if you created primary sector jobs, you build it, they'll come. Guess what? We have 80 open primary sector jobs in places in my state where they can't get workforce. And so we've got to build back these communities, but that bank, that community corner bank, is always been a huge part of that economic development, and we're losing it as a result of overregulation of the community banks and the credit unions. There's no doubt in my mind. And so we're adamant that this is going to get fixed. But I don't want to walk out of here and not point out that the most despair economically in this country is in rural America.